I was wrong. I was wrong about a lot of stuff this past year. And we're going to talk about the markets in this video. We're going to talk about what's going on. Some very important stuff happened after the bell. But first, I want to acknowledge the massive things I was wrong about this year, which is several of those things I've been wrong about this year. And I think it's very important I acknowledge this. It's very important I show people the mistakes I made this year. So whether you're bearish or bullish going into 2023, you can learn from the mistakes because there's definitely some very important ones I've made. And in regards to me, and I've been on YouTube since 2016, and I've always taken the approach of acknowledging my mistakes and then being able to move on from those, right? And I've always kept up all my videos, whether I was bullish, bearish on different stocks or the market in general, things like that. I always keep up my stuff. I don't shy away from it. At the end of the day, I've always looked at myself as much as I give my opinion and things like that, I've always looked at myself as like an educator. And so you can't learn without learning from mistakes. Like the situations you learn the most from in life are mistakes, right? So I've never wanted to really like craft like some kind of perfect ideal image around myself of like, wow, he gets everything right. Oh my gosh, he's so smart. Wow, he's never wrong. I've definitely never wanted to craft that sort of image. And, I've had plenty of success. I think we all know that. And this past year, I've gotten a lot of very important things wrong. And, I just think it's important to acknowledge that and to show you guys that. And then we'll talk about the markets. We'll get into all that. I just want to do this first because I think it's very important. I think everybody's going to learn a lot from that. Thank you for everybody that subscribed to the channel, obviously. I appreciate each and every one of you guys, even with the, the realness and kind of getting into stuff like this, right? And by the way, Moomoo right now is celebrating their 10th anniversary. So if you want some free stocks from Moomoo, check out the pinned comment down there. And they have several different deals. One's like if you sign up for an account, you get a free stock. If you deposit a certain amount of money, you get even more free stocks. And if you deposit a bigger amount of money, you get even more free stocks, up to 15 free stocks valued up to $2,000. That will be pinned comment, okay? So first thing is, I was wrong about how sticky inflation would be. And I was wrong about inflation on both sides of it. Here's the deal, okay? I thought in 2021, I thought inflation was way higher than it was. And I would see these numbers come in. And it would be like, inflation would come in at like 3, 4, 5% in 2021. And I was just like, what? Like, it doesn't make any sense. Like, I always thought like inflation was way higher than that. And I'd see these inflation numbers come in and I'd be like, it doesn't make any sense. Like, I feel like inflation is like 10% plus. It was just ridiculous, right? And then going into 2022, and as the year went on, I thought inflation would peak likely in springtime or maybe summertime, and then we'd start coming down. And it went up way higher than I thought it was going to go up, essentially, in regards to CPI. And I just never saw inflation being that sticky, us still being in the 8s at this point in time. We're in the fall of 2022 at this point, and we're still in the 8s. Like, I did not see us being that high still this long into it. And when it comes to inflation, that was never something I've even had to concern myself with since I've been in the market, right? I got in the market at the end of '08, going into '09. Inflation has never been a big deal, ever, until basically the past 2 years when obviously, Rona screwed up everything, right? And so all of a sudden put into this dynamic where all of a sudden inflation matters, right? And trying to judge these sorts of things. I think the next time we have an inflation situation, I'll be better at judging it and understanding, when the numbers will start to really go up, how sticky they'll be and things like that. But the thing with inflation is that might not be something we have to deal with in a major way for potentially years, if not decades. The thing is, like, the last time we had to really be paying attention to inflation heavy, right? Inflation is always something people keep an eye on, but not heavy. Last time we had to do that was in the 70s and 80s. So this is something, I might not have to deal with inflation. We'll see what happens, obviously, over time, right? But in terms of, the next time inflation goes crazy, it might be 30 years from now, 40 years from now, right? I think I'll be much better at judging it then, but, that's something that happens, right? So that was very important, and obviously that caused many various things to get far worse, right? I didn't think Putin was going to go into Ukraine. I didn't think that was going to happen. I've always heard politicians from different countries talk tough, talk big, right? We're going to do this, going to do that. And so, even when Russia was setting up their equipment and it was kind of like, oh man, they might make a move, I didn't think he was actually going to go in there. I thought there would likely be some sort of agreement reached between different countries before that. Because for through a lot of time, there's always been good negotiations between countries and trying to figure these things out, right? And so I thought, that's a big country Russia's going into. That's a big risk. Ukraine's, that's not just like a walkover situation. And the fact that Russia actually went in there completely caught me off surprise. I was not prepared for that. And that caused inflation to be even worse, right? We probably would have peaked inflation back in the springtime and not, in the summertime if it was not for the fact that Russia went into Ukraine. Because what happened when Russia went into Ukraine was gas prices went up massively, obviously, right? Because that disrupted the entire energy sector. Oil prices went through the roof. Natural gas prices went through the roof. Energy prices in general. So it added just more fuel to the fire, for lack of a better term. And obviously that caused the entire market to get hit in a much more substantial way, which caused inflation to be higher, which caused the Fed to be even more aggressive, which caused, guess what, stock prices to go lower. So, I didn't take that serious enough. And the one thing I'll say is, with all the talk about, nukes, things like that, I'm taking that very, very serious. Like, I think about that, I take it very serious now, because at this point in time, I'm like, I thought this wasn't a possibility. Who's to say the next thing and the next escalation is not, very serious? I think about China, Taiwan. I'm taking all those things very serious now at this point in time, because I've seen what happened here, and I'm like, who's to say, it can't get worse when it comes to those sorts of situations, right? I never saw the Fed being this level of aggressive, right? We've gotten very used to, in my entire investing life, right? I've gotten used to a Fed that is very accommodative to the stock market, very accommodative. And as soon as there's any worries, they would be there to help things out. Let's just call it that, okay? And so the fact that the Fed got this level of aggression, like we've never seen the Fed this aggressive, to be quite frank, in history, even in the Volcker era, the Fed was not this aggressive. This is a whole different dynamic of aggressiveness in the market. You don't want to look at just like the point change that they're doing. You want to look at the percentage up that is, right? And so the Fed's been like doubling interest rates at an insane clip that we've never seen really in modern history, or ever in history, honestly, from the Federal Reserve, which I never saw that coming. But the reason they had to do that is because inflation went up so high. When you start talking about CPI numbers coming in at 7, 8, 9%, the Fed gets stuck in a situation where they have to raise rates massively, right? And as the Fed raises rates like that, and they, basically contract the credit markets, it causes a horrible dynamic for stocks, and specifically for growth stocks, right? Also, we've seen simultaneously bonds and treasuries, things like that, yield very high numbers. And so a lot of people have, taken money out of the stock market and put that money over in the treasury market, which is something I never really saw coming, right? We've never had competition like that in the stock market. We've never had, treasuries trading at 4+%. So all of a sudden you have that dynamic, and all of a sudden it's like, wow, we got competition for money out there, right? And even a lot of dividend stocks like the Verizons and AT&Ts, they've seen that play out, right? So I never saw the Fed being this level of aggressive, to be honest, because they've always been so helpful, let's just call it that, to the stock market. But that is exactly what has played out here, okay? Next thing is, I never saw those small cap stocks go into these sorts of values. I'm thinking Chef, I'm thinking Honest, I'm talking about Oatly, $2, $3, $4 a share. I never saw those stocks getting down to those sorts of prices, to be honest. I always thought, okay, I could see those stocks going down, me being down, pretty big on those positions, but not to that extent. All those stocks are at way lower prices than I thought they would be. And that's just a fact behind that. Even in my most bearish cases, I did not have those stocks going to those sorts of prices. That's extraordinary. But when you understand money-losing companies, right, especially in regards to obviously the Chef and Oatly, money-losing companies in a very difficult credit environment, right, everybody looks at those and they're kind of no man's land, because like they were focused fully on growth, but now the stock market doesn't want them to be focused on growth anymore at this point in time. The stock market says, no, we need you to focus on profitability and margins. And so these companies, and it's not just them, it's obviously massive amounts of these sorts of companies, right, that were the growth companies. All of a sudden they're looking and they're like, wait, so now we can't, it's not just about revenue, it's just not about growth. Now we also have to focus on margins and profitability, and that takes several quarters to pivot your business into a business that thinks profits first, revenue second. And so that's what every single one of those businesses is having to go through right now. And that's a very difficult transition to go from we're thinking about revenue first, we're thinking about growth first, to now we got to think about margins and profits. Oh my gosh, okay? That's a whole different ball game there. And so all those stocks have gone to much lower prices than I ever thought possible, okay? in terms of big companies in general, right? If you know me, and I've been on record many times, I've said countless times, the big companies were trading at too premium valuations. They need to come down. But I'll be honest, I did not see these companies falling this much, right? And this was a screenshot I took as of October 16th. Some of these stocks have come back since then, right? Did I ever see Tesla getting cut in half? Maybe Tesla, okay? I have been a little, even though I'm obviously a long-term bull on Tesla and a shareholder of the company, I did speak many times about Tesla, okay? Did I see NVIDIA go down 62%? Nope. AMD 62%, PayPal 58%, Meta 62%. Never saw that in a million years. No way, okay? And so the fact is, when it comes to all these big companies, I did not think, these $10 billion plus companies, I did not think they would fall this dramatically as they've fallen, and they all did. And obviously, what happened? The Fed, right? And that's totally changed the way people want to value stocks, the way they run their DCF models and things like that. It changes everything. And so, you kind of put all the pieces of the puzzle together, and you kind of understand now why these stocks have fallen 50, 60, some of them 70, 80% at this point in time. I never saw that coming, right? Now, so very important things that I got wrong, right? And why does this happen, right? I think I went into 2022 being probably too far to the optimistic side. I'll just be honest, okay? And why does that happen? Why did I go into 2022 with too on the optimistic side? Well, we were coming off of 2020, where we had a great market. 2021 was a pretty good market for the most part, right? And so naturally, you start to think about positive things, right? And positive dynamics are going to emerge. And even watching what happened in Rona, the market came back so much faster than I expected. Earnings came back so much faster than I expected. So even in that whole scenario, it makes you almost start to think positive about everything, like only good things can happen, right? And this was the opposite year for optimists. Everything went worse than expected. Everything. If you were super bearish going in this year, every single thing that could have worked your way this year, okay? Bottom line, this was a year of the pessimist, right? And the naysayers, the doomsday folks. Everything has worked exactly their way. Fed raising rates far more aggressively, inflation being far worse than expected, corporate earnings deteriorating, no one wanting growth stocks anymore and wanting to switch to value or switch to treasuries, the treasury market getting more competitive, right, versus stocks. Everything has worked according to plan in terms of that. Russia obviously invading Ukraine, everything lined up perfectly for the pessimists, right? And they won. They won this year. This is the year of the pessimists. They won, man. This was their year, right? Now, if you're thinking about this moving forward, right, it's natural to start to think about everything's just going to work against the market and everything's going to go bad moving forward, right? Because that's all we've gotten for the past year. Literally, for the past year, all we've gotten is everything that could have gone bad went bad, and it went worse than almost anybody anticipated, right? And so now it's very easy to get caught up into that thought process moving forward about being pessimistic, about, the market only goes down and, things are just going to work against the market and everything that you thought could go good is only going to go bad. Watch out for that. That's all I'll say about that. Most time, these folks win. Most time, the optimists win in the stock market. That's just a fact, okay? But every once in a while, these folks do win, and when they win big. And this was definitely a winner, chicken dinner year for them. So, if I had to go back in time, I would just be a little more on this side. Let's just call it that, than this side. But naturally, I'm a little bit of an optimistic person, right? And then when you come off those, 2019 was amazing for me. 2020 was amazing for me. 2021 was amazing for me. When you come off that sort of unbelievable performance in terms of your stocks, your portfolio, dang, man, you really start to think about everything as only being a positive, right? And that definitely is a trap I fell into. So that's a huge warning for you. And I think it's just important that I acknowledge that and, those sorts of things. So I hope you guys enjoyed that segment, okay? Now, let's talk about the markets. There's some very important things that are going on out there that I want to show you guys. First is commodities had a nice red day today, and this was good to see because the markets were green today. So when you see green market and commodities red, that really gives me some comfort, okay? Lumber was down big today, 5.6%. Oats were down big again. Oats prices continue to just collapse. That will eventually show up in Oatly's numbers starting probably in next quarter and then moving in future quarters. So, I know everybody's given up on Oatly, and it's like a $2 stock here today, but, some sun might come out there. Let's just put it that way, okay? Wheat down again here today. WTI chilling. WTI, although it's some bullish dynamics that people are looking at out there. You can't get WTI to make big moves right now. Reason being is we're about to go into wintertime. WTI just usually doesn't do very well in wintertime, right? And so it's just kind of a tough dynamic. Natural gas usually does do good in wintertime, so that's the one to actually keep an eye on that. I'm a little afraid of their copper down today, silver, gold, and corn down as well here today, okay? Now, if you haven't seen what's going on in China, it's a disaster. A complete disaster, okay? Look at the Chinese stocks here today. These stocks, NIO down 15.7%. And this is actually a relatively decent retail stock out there. So I can almost guarantee you, there was probably some margin call activity. Same thing with BABA. It's actually a pretty big retail stock. So I can almost guarantee you there's some real margin call activity. If I had to guess, margin levels right now are the lowest we've seen them in many, many years, probably since like 2018, maybe 2017, something like that in terms of actual margin debt outstanding. At this point in time, I think it's a very low number. I think margin calls are left and right out there right now. And, these Chinese stocks, a lot of people have wanted to play them. And this has been, one of the things I've been fortunate to get right this year is staying away from these Chinese stocks, although the valuations look so compelling with them. They can't get out of their own way, man. Everything, China is a mess. The real estate market there is a mess. They have massive credit problems. The government has internal problems in their own country, right? I don't know if you guys saw the video where actually the gentleman that was sitting right next to President Xi got removed from their conference. That was let's just call it not a good look from an international level there. And the fact that they were at this massive, presentation conference, whatever you want to call it over there in China, and all of a sudden they're telling him to get removed, and he was kind of like creating a little problem there, and President Xi's just like looking like, that was a whole sketch situation, right? Obviously, they have not just internal problems, they have with their own people and whatnot, they also have external problems with dealing with other countries, including the United States, and then they're kind of in this like, we're going to, the United States does something to them, China tries to do something back, and ultimately no one wins in that. It's very similar to war, right? No one's going to win. It's just a lot of destruction, and that's kind of what's playing out there. So China has a lot of problems, and trust issues are massive in China. That's been my biggest thing while I've always stayed away, is just the trust issues when it comes to investing my own money into these Chinese companies. I just can't do it. And those continue to be in a tough place. This is a Hang Seng Index out of Hong Kong. Look at this baby. It's down almost 42% in the past year. It's an extraordinary move. Now, not only that, look at the acceleration to the downside very recently here. That's scary. That's what we call pretty much down in a straight line, which is similar to kind of what you saw right here, okay? That is scary. And when do Chinese stocks start to come back? I don't know, man. I don't know if it's anytime soon, to be quite honest, man. That their whole Chinese market is in a tough place for a bit here, okay? Now, after the bell, some very interesting things happen, okay? If you don't know, Amazon's reporting their earnings here in a few days. But after the bell, we got an interesting report out where it basically says that Amazon is kind of almost freezing hiring in AWS, or a lot of positions in AWS, right? Which AWS, Amazon Web Services, has been a huge growth engine for Amazon, right? Now, this creates some scare into earnings because you just had Bezos tweet out a few days ago, right? And Bezos obviously isn't the CEO of Amazon anymore, but believe me, he knows everything that's going on there, right? He says, yep, the probabilities in this economy tell you to batten down the hatches. It's very scary comments. I saw that and I'm like, oh gosh, Bezos, that scares me, man. Because it's freaking Jeff Bezos saying that, right? And so, because he's not a very opinionated person like that. When he says something like that, it's kind of like, oh gosh, man, seriously? And so that's definitely worrisome when you talk about even a growth engine like Amazon Web Services potentially freezing hiring, things like that, right? And that's why the unemployment problem could become it's not even a problem yet, but it could become a problem in 2023. Because if you see companies like Amazon freezing hiring, right, which we already saw that kind of earlier in the year in regards to their warehouse business, things like that. But when you see an AWS reports of that, oh my gosh. So hopefully we get some more commentary about that tomorrow, or not tomorrow, in 3 days on the Amazon conference call Thursday, because that's definitely a little scary. That's the way I describe that, okay? Now, Fubo. So I thought this was important to point out, okay? People are wondering how's Fubo doing. The trend is still very, very positive for Fubo in regards to Google Trends. Their trend data is the highest it's been. And, even recently they're at a 75 versus like a 62 a year ago. So from everything I see, Fubo is likely still tearing it up with numbers and likely will continue to add massive amounts of new subscribers. We just just saw their numbers come in recently, and North America is way better than expected. So yeah, I'm incredibly bullish around Fubo. Obviously, it's a money-losing company. No one wants that stock. It's a $3 stock right now. But I'm willing to get through this pain to make it to the other side, and I think they will make it through this pain. Okay, now, in terms of confidence levels around a lot of these small cap stocks, right? The $2, $3, $4 stocks, right? Because I think that's important, because people are wondering, like, am I still confident in these companies and things like that? The quick answer is yes. The longer answer is these companies got to put up numbers. The fact is, everybody wants to see from these companies margin improvements, cash flow improvements, massively over the next 4 quarters. So these companies, at this point in time, it's kind of like you're getting ready to play a game. There's so much trash talk before. Now it's just time to play the dang game, right? And so when it comes to these companies like the Chef, Oatly, Honest, all those smaller cap stocks in general, they're going to have to prove it in the numbers over the next 4 quarters. They're going to have to show margin improvements in a substantial way, cash flow improvements, and then talking about profitability, okay? That's what they have to put up. And so we'll see how that plays out over the next 4 quarters. I'm confident, but at the same time, I'm like, I got to see it in the numbers, right? Let's see it in the numbers. Let's make sure these companies are actually going to make it through and make it to the other side, right? And that's just, I think, very important. So it takes a bit for these companies to readjust from this growth at all cost mindset to all of a sudden, we've got to think about actual profits and margins. Okay, let's start thinking about that, right? So I just think that's important. I'm confident, but they got to put up the numbers, okay? And so the numbers will be important. And the companies that put up the numbers, their stock prices will thrive. Let's be very clear about that. The ones that don't will be stuck at penny stock prices. That's the bottom line. The ones that don't make those big improvements over the next 4 quarters with margins and cash flows, those ones will be stuck as penny stocks. The ones that do their job, which I think all those companies are going to do their job, right? The ones that do are going to get back to their old share prices and eventually higher prices down the road, okay? So I just think that's very important out there. Hope you guys enjoyed this video. I hope you got some good value out of it, especially in regards to, kind of seeing those mistakes and kind of talking about that. I appreciate everybody for joining me and kind of, being real with it and those sorts of things. If you want to check out that deal from Moomoo, that would be pinned comment down there. Get up to 15 free stocks valued up to $2,000. Much love as always, and have a great day.